Good morning, everyone. This is Anne Marie. Today's Friday, February the 10th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Hey, I want to talk to you about something pretty interesting. We're going to discuss price. Notice I have one indicator sitting on my charts. I used to be a person that had a lot of indicators sitting on my charts, and now I just have a couple. Now, I'm not going to call the heat map an indicator, but indeed it is. All right, the big indicator I have is moving average. It's an EMA, and I have a 620. The MA Cloud by Ripster is really, it's great. And so I use that. What we've noticed on the daily chart in the E-minis is since we began the turn in January, what we've done is every time we've come into this ribbon, we've bounced. Now, January 19th was very deep, and then January 20th, we were right back up in the ribbon. On January 25th, came right back down to the edge and bounced, and also here on January 31st. And here we are coming into February, and we're at the bottom of the ribbon. Now, it's been a while since we've tracked 3 days in a row, right? In terms of general counting. The last time we really had more than 3 days in a row was December. So it's only February, but again, these patterns are very important for us to consider. So let's think about what's happening. We have 3 downward motion events, and it could push us well beyond the bottom of the ribbon. Notice, what is that? What day is that? February the 1st. That's the candle we're tracing through right now, and the low of February the 1st is somewhere around 40.48, I think, 40.48.50, okay? So right around 40.49, we're gonna have an alert, right? Somewhere around there, 40.49, we're gonna have an alert, and it says, yeah, let's pay attention to price action here because it's important. But we're also sitting at a very important place right now. And what place is that? It is the open of last week. That number's actually 77. I'm gonna shift it. I always give us a little bit of room so that we can sort of squish our way around this, because they're not hard lines. They're ranges that people will come in and battle depending on what kind of strength comes in to buy. Now, people noticing patterns are going to say, hey, listen, we've only had 3 days down in a row this year. I'm going to guess that that's what's going to happen here, and we're going to bounce. Fine. If you're going to do that, then you have to look at the low and go, okay, well, as long as it doesn't breach, I don't know, 40, what's the low of this one? 40.57. As long as it doesn't come through that area, I'm going to be okay. And if it comes into 57 and bounces, and I take the trade, it better get up over 77, because something very dramatic has happened. We've lost the range of our prior month. And so look at what's happened. Red month, green month. Green month, red month. Green month. Is this going to be a red month? I don't know. We had 2 red months in a row. We had 1, 2, 3 red months in a row, but look at the size of the wicks. That's the problem. The traders right now are trying to get up above 40.77. My thought is the test there is going to be a short, because I suspect we are going to come back into the weekly moving average and fade into this area. Now, what if I'm wrong? If I'm wrong, it's going to breach 40.84, and when it pulls back, it's going to hold 40.77. So that's what I'm going to be staring down on my 30-minute or 1-hour charts for the long sitting in that region. Otherwise, the first pass up that bounces is a short that should come in to these lower levels, right? These lower levels are critical. What is the low of last week? It is 46. Is that right? Wait, here we go. Low 40.07.50, right? And again, I always have it a little bit higher. So we pay attention when it comes into those ranges, but that really is what we're after. I've spent a lot of time here because what I want you to see is there is a battle going on right at this price. So you don't want to rush in on the breakdown, and you don't want to rush in on the buy zone, because they're arguing about how the prior week opened. And indeed, what they want to do is get above the close of the prior month. And the close of that prior month is 40.90. Okay, so I'm going to add, I'm going to clone this and put it in at 40.90 so we can see that that is that interim level that we want to go through to hold the range back to the upside. All right, it's going to be a very interesting day, but the first people that are going to argue here are the buyers, and that is because trend is up. Okay, so don't short the lows on this case. Let it bounce and fail, and then you'll be able to short it. Let's put SPY in here. All right, intra morning, we are down at, oh no, that's not it. Add non-regular trading hours. All right, so now we're here down at 405, but we're at the bottom of the ribbon. Same sort of thing, folks. What we're doing is working our way down. Look at this 405, 405.50. That's exactly where we're dancing. 2 weeks ago, though, okay? 2 weeks ago, that's the level that we need to watch, okay? So it's also that region near the close of the prior month. Notice, SPY is bullish at this juncture, but the close of the prior month here, 408.16, we are well below it, okay? We're well below it. So what we want to anticipate is the buyers will come in first, try to bounce, but they're already in a fade. So if they bounce and cannot get up over that 408 area, it's going to be another fade to the downside. So these levels are critical. They are the same levels. Folks, I try to be as transparent as possible so that I can give you everything that I know. But this is a game where you have to put in the work. It takes study. You can't just go, just tell me where to trade or just tell me the level, because nobody really knows except for the squishy parts, and we have to watch at those squishy parts to see what's going on. And so we're at a squishy part, right? So my first thought is we're going to see wicks like this on the very bottom because buyers are trying to hold, but in the end, if we move all the way down to say, I don't really like going anywhere smaller than 15 minutes. So let's say we get on to the 15 minute, it's telling us, well, there's my resistance zone. And so I might bounce off of the low, but here I am at resistance. And if you've got downward trend and you bounce into an old high that got rejected, you're going to see sellers there. The question is, how many? If you say to yourself, hey, maybe this is an inverted head and shoulders, or maybe this is a red dog reversal, or whatever it is that you study, that's going to be what you need to watch for. So if you're thinking to yourself, no, this is going to recover, the first people that are going to come in are sellers here because the trend is down and that's old resistance. They're going to pull back. Where are they going to pull back? Probably here. If you want to take a shot here, the moment that it loses that 404.90 area, you're going to have to reassess because price action continues to be down. All right, those are the levels for SPY. Let me look at the Qs very quickly. I know a lot of us trade those. And I know you use, I know some of us use leveraged ETFs. Not a fan of those to hold at all. At all. So look at this, how interesting this is. All right, let's go to the daily. And we've got, we're in here in the pre-market, down here at, look at the battle, the high of the prior month, right? Tech is doing really well because of AI and XYZ, but they're battling the same battles. Can I hold the prior month's high? The other charts have faded inside of that space. I suspect the Q follows, okay? So sometimes the Q leads, the Qs lead, sometimes they follow. I don't know which one. I'm just gonna look for price, and I'm gonna anticipate that the deep dips, we're still gonna see people try to buy. So if you're short and you come into these ledges, you've got to take some profit because buyers could be sitting in there at any time. Hey, I know long, wanted to give you some study study stuff. Good luck trading today. Stay frosty.